Hello and happy 6th of July. It is the hash, and we are here to talk about crypto news in this fine month of July. Let's start this thing off. Naomi, I believe you have our opening story. What is going on?
Look at that
Things are going
background.
on. They're going on
Yeah,
in
and you made
NBTV.
China.
that background
Holy
yourself. Let's just talk about that
smokes.
You
first.
like it? You like all
Look
my
at
thing?
this
I've
She
got
can
like
stuff.
the
do it
Production
all.
sun,
values here,
Monero,
man. What is
Bitcoin,
going
Doge.
She
on?
can do it
It's
all.
a lot of fun things.
Wow.
But
Love this.
let's go to China. So some interesting things going on there. All right, let's back up a little bit here. So DD Global, a couple of days ago, just launched on the New York Stock Exchange. They had the second largest U.S. initial public offering for a Chinese firm. They raised $4.4 billion. It was a massive event. And then days later, regulators in China ordered the removal of the company's platform from app stores. They have barred new users from going onto the platform. There are all these concerns they're citing about, well, potential transfer of data. Maybe, one of the reasons why they were allowed to list in New York Stock Exchange was because they would hand over data. So, the Chinese government is really cracking down on these. These are just theories. The executives of Didi, which is a ride-sharing app in China, very popular app, they have all denied this and says we will sue anyone who spreads these false rumors. It's this big thing. I mean, this comes at the heels of China also cracking down on cryptocurrency there. They're tightening the economy. They're cracking down on Ant Group November last year, where they've broken up the company. They've said Jack Ma can't, extend the business into certain financial areas in China. Like, there's just big crackdowns going on at the moment. I'm going to throw this to the group. There's lots to dig in here. But Zack, I'll throw it to you to start off with. What are your thoughts on all of this?
I got nothing. I really haven't thought about this a ton, so I'm gonna throw this to Adam. Adam, why are we interested in this? Like, what is the so-called crypto angle here? Put this on a T for me.
Well, thanks, Zach. So, I
No
mean,
problem.
when you
Anytime.
think about this from a crypto perspective, really we're talking about control here, right? Power is the narrative that runs through the cryptocurrency story. Sure, there's things that don't really have much to do with that, but when we're talking about Bitcoin, when we're talking about tokens that are really kind of trying to displace some of the functions served by governments around the world, you are effectively talking about power. Who gets it? How much of it is there? What can be changed? And this is another indication that in the traditional world, especially if you're a company that's operating out of China, the Chinese government has an incredible amount of power. They can basically just do what they want and really without a concern. So, I mean, like, to me, this feels more like a flex than it does anything else, right? We're looking at an exercise of raw power coming from the Chinese government, and certainly it's to the detriment of people who invested in that IPO, but that's the way it goes sometimes. Jen, I saw you put your hand up.
Yeah, I was in China about 2 years ago speaking to both foreign and local people who had run successful private businesses in China, and both strongly implied that if you wanted to have a successful, long-lasting career as an entrepreneur in China, you had to have the government's involvement, and that involvement was pretty heavy-handed. And so I mean, we saw this with Uber, we saw it with Coca-Cola. Coke had to exit China and come back. And so it seems like there's a lot kind of going on behind the scenes with Didi and their government connections. Naomi, I saw your hand go up. I don't know if you have more details on that or if there's speculation on what might be happening.
Well, I just wanted to mention the tactic that they've used with Didi. It's very different to what they used with Ant Group. Ant Group had planned to IPO in Hong Kong and in China, and they shut it down before it happened. Here, they waited till days after the IPO, and this IPO was happening on the New York Stock Exchange. So the primary pain point for this, where you've seen stock plunge, has been to US investors. So it kind of seems like this double-edged sword there. They're attacking on multiple fronts. On the one hand, hurting US investors, and on the other hand, as you laid out, Adam, talking about control and making sure that the government is really managing the economy from the top down and keeping like really tight reins on it. But let's Will, you got any final thoughts here about all of this?
Yeah, I guess 30 seconds left, wrap it up. I mean, I think just to Zach's point, like, why does this matter for crypto? Well, if we consider crypto to be a tech stack for the future, then it necessarily matters that China is cracking down on any angle of tech. And we can just kind of like broadly see that they're doing the same with the exchanges. They've been putting a lot of pressure on Binance, have been putting a lot of pressure on Huobi and OKX. They've put a lot of pressure on a lot of different companies in crypto, not just exchanges. And now they're moving out into other areas with DD here. So pretty rough month or quarter for China, I'd say, in like the tech world. So interesting to see how the rest of the year unfolds. Like, does it kind of have to do with just that July 1 anniversary date at the CCTV, or is it more of like a foreshadowing of things to come?
Yeah, for sure. But let's change track here. Zach, we've got some other interesting regulatory things going on. Tell us about that.
Yes, let's go to Washington, D.C. We're going to talk about the Financial Crimes Enforcement Network. FinCEN has hired its first chief digital currency advisor. Pretty interesting appointment here. This is Michelle Corver, who worked for the Department of Justice for a number of years as a counsel doing digital asset stuff at that agency. This to me represents sort of the latest sign that FinCEN is taking crypto a bit more seriously these days, and potentially adds a bit of nuance to its ranks. This is someone who wrote, interestingly, for the Department of Justice's journal earlier this year, sort of tracking the historical evolution of crypto from the dark web to now becoming less pronounced feature of the cryptocurrency world. I'm going to throw this to you, Will. I know on the regulation front, it's been a while since we've delved into some of these regulatory hires. Are we going to see this from more agencies in DC? Is this going to become sort of like par for the course, or what's your take on how FinCEN is approaching crypto lately?
Yeah, so just kind of stepping back, like my initial impression from like tracking regulator news, and maybe it's just like the negative hits on the back of my brain, is I always see like FinCEN hiring people and like enforcement agencies are always hiring people, but there's not a lot of people doing like the regulatory work to make frameworks. Like, where is the IRS guidance for taxes? That would be pretty useful. Instead, they're just hiring up blockchain analytic firms, and they've even like tapped a lot of these firms. I think you probably have better details on that, but I think they're working with chain analysis and stuff like that to be able to track people who are using crypto. And there was reports earlier, I think in like April, when Kraken was having to divulge information on anyone who transacted over $20,000 on their platform. So I just don't understand maybe it's just because of how the nature of the federal government works when it comes to enforcement. Like, every branch has its own tasks. Maybe FinCEN is like up to its duties a little bit more than the IRS or other agencies. But yeah, I think we're just going to keep seeing this more. Just to get to your question, like, we're going to keep seeing this more and more and more. Like, blockchain and all that good stuff isn't going away. Obviously, people are taking it more seriously, and we're just going to keep seeing more of these hires. Naomi, what do you think about these hirings? Are you pro FinCEN? Like, if FinCEN had to exist, would you be okay with them hiring people like this crypto czar who obviously has his foot in the space? Like, if you had to choose your pick for someone who had been in this position?
You are trying your hardest to frame this in a way where I might conceivably be okay with them appointing a crypto czar. And I applaud your efforts, Will, but that's not even, it's not even going to come close. I mean, they're literally hiring a crypto czar to control this. I have a lot of issues with government regulating cryptocurrency and their approach. And I think you're spot on when you talk about the difference between them actually providing helpful guidance that could help businesses grow and could help, investors and citizens in America, and then them just hiring more people to crack down on people who might not necessarily really understand the legalities around all of this, because we're still in a very vague position with understanding crypto and how it fits into all of these different institutions, because they all class it as completely different things, and it gets very confusing for people to try to work in this industry. But Adam, I'm going to throw this to you. Perhaps you have some things to add there.
Yeah, so as we were discussing with the last story, again, this is all about power. When you're looking at these types of appointments, effectively what you are seeing is the government, to the points that have been both made by Will and by Naomi, you're seeing the government say, we're not going to solve any kind of lack of clarity, which is very much what they exactly should be doing. Instead, what they're doing is they're continuing to make high-profile appointments of people who really aren't going to add any clarity to the situation at all. What they are going to do is they're going to continue to, in all likelihood, I believe, perpetuate the narratives that Bitcoin is something that's for criminals, that the ransomware stuff that we've seen recently is a reason to regulate it at the protocol level. Now, of course, these things are not possible to do, but that isn't actually what the point is. The point is that the narrative needs to turn, because again, we're kind of trapped in this Streisand effect cycle with the government, where they can't ignore it. It's too big. It's too important. Too many people who are important to sort of the legacy financial system are interested in this stuff and are talking about it now in ways that they did not do in years past. At the same time, this has come when the reasons why you could argue against it, whether we're talking about from a green energy standpoint or we're talking about from a criminal utility standpoint, 0.022% by last measures, which compares very favorably against the traditional financial system. Again, what you need is you need a way to talk about this without actually talking about it. And that is very much what this smells like to me. Jen, over to you.
Well, I just want some clarity from Zack. When I was reading the story, there's a quote in there from Michelle, and she was saying that she wants to steer the narrative in the way that Adam was just explaining. And is this not maybe one small step in the right direction if we want all of these things to change that all three of you have brought up?
I'm with Jen on this one. I don't think this is a doom and gloom power grab story. I think this is adding nuance to the regulatory stack over at FinCEN, right? So the acting director of FinCEN right now is a former Chainalysis guy, writing for the Department of Justice. Like they have some journals writing for them earlier this year. Michelle was very cognizant of the fact that crypto funding illicit activity is down as crypto being used for other mainstream purposes rises. So I see this as hopefully bringing a little bit of nuance to these discussions. You remember that FinCEN rule that was floated, I forget when, that caused a big uproar in the crypto community. I think you could reasonably interpret this as adding some nuance to that discussion. But hey, only time will tell. We shall see. All right, let's move on.
You're not nearly as jaded as Adam and myself.
Naomi, your face throughout that whole thing was like
power. Me and Jen are like,
I was just like,
we're like, maybe good things will happen.
I was in the middle.
Okay.
It's good.
Yeah,
Well,
adding more government appointees, maybe good things will happen. Yeah, that's gonna happen.
There's some good, like Hester. You like
I can't
your
say
Hester
anything or we're
stand.
gonna go
I
down
love
the rabbit
Hester.
hole.
All right,
See,
I love Hester.
there
Brand
are
new
good and there are bad.
things, not all bad.
We'll see. We'll see.
All right, we're going to take a break and we're going to talk about some more stuff when we get back from the break. We're going to talk about NFT sales in the first half of 2021 and some fresh data on how that all shook out. So stick with us. It's The Hash. Good to see you. See you in a bit.
From fueling local economies to connecting global markets, the future of money is taking shape now. CryptoState by CoinDesk will bridge communities of crypto investors, thought leaders, and developers from around the world. Together, we will tell the global story of decentralized finance. Join us for this virtual event series as we stop in Nigeria to dive into the movements that are disrupting markets and changing communities. Register today.
One of the most widely used charts for predicting massive future Bitcoin price gains is showing the largest divergence since January of 2019. The Bitcoin stock to flow model currently suggests the price of Bitcoin should be around $77,900 per BTC, but as of today, the token's been trading just around $34,000, about half of the expected price. The pseudonymous crypto analyst behind the metric, who goes by Plan B, says the next 6 months are going to be make it or break it for the continued utility of the metric that's a favorite of many advocates of so-called hyper-Bitcoinization. Naomi, I'd like to start with you. Stock to flow in a lot of ways is a very simple model, using Bitcoin's diminishing supply to forecast increased price relative to demand. This is, in many ways, an argument that Bitcoin is and will continue to behave like a monetary asset. But is it?
That's a great question, Adam. I think that when you're dealing with these predictive charts, it gets really, really difficult to actually know what's going to happen because these things don't just occur within a few different variables and different parameters. We have this entire global structure to take into consideration. When you've got crackdowns in China going on and suddenly the price tanks, I mean, these charts aren't predicting things like that happening. And so it makes sense that we're seeing a lot of divergence here from what otherwise might have happened. But it also goes to show the power that governments can have. And there's a lot of rhetoric in the crypto space where they say, well, the government can't shut this down. It's like, I agree, because this is a global phenomenon and different jurisdictions are going to have different rules, but different governments can definitely throttle it and thwart it. And if the government in the United States started to enact some of the same policies that China is happening, what if there's a big environmental push and, everyone's like, well, Bitcoin, you can't have mining here either. And then, well, I mean, what would that do to the price? So there is so much that the governments could do because they just wield way too much power. And so it is interesting to see charts like this and see what might have been and the prosperity that might have been created and all of this, and then to actually see the reality and how the government's bad laws have kind of dampened that. So it does provide a kind of compare and contrast thing. Where it's going, I mean, I have no idea. Maybe someone else on the panel has a better idea. Obviously, I'm still long-term bullish, but in the midterm, governments can actually influence this a tremendous amount. Will, I'm going to throw this to you. What are your thoughts? Where are we headed?
Just in terms of the chart, I'd happily see Bitcoin go to zero so we could stop talking about the stock to flow thing. It's just makes absolutely no sense. And it's made no sense since it came out. It's just ridiculous. You don't just come up with a price by charting the year and then the supply of issuance. You can do the same thing with celery. It's not going to make the price go up or down or whatever. It's just demand is what causes these things. And to Naomi's point, China and all the news that came out of there created a lot less demand for Bitcoin, the asset. And so it went down, and maybe in the future it goes back up. But plotting the history of Bitcoin's price and then drawing a line through it does not really sit well with me. So that's my take on this story.
All right, let me jump back in there and kind of set things on a slightly different path here. So when I'm talking about kind of the monetary element of this, effectively what you're looking at with this is they are comparing it to the history of the monetary metals, which would notably be silver and gold. So in a situation where you have supply that gets tied in with something that is desirable because it has moneyness characteristics behind it, and you have escalating demand, then you can actually kind of model what future prices look like. So the question to my eyes is a lot less about, is this predictive of the future of Bitcoin price, and a lot more about, is Bitcoin behaving like a monetary asset in the way that gold and silver traditionally did in years past? Now, that is a question that I don't really think we have an answer to, but it's a question that's really critical to kind of the path that Bitcoin is on right now, which is very much as this sort of future global reserve asset path, right? If that story is true, then stock to flow has a decent argument behind it. If that story isn't true and that's actually not what's happening here, then it's probably going to diverge from that. And so I think that, again, to this point, irrespective of whether this is predictive of future price, for other reasons, the question of, is the narrative that Bitcoin is largely riding on at risk as this price is at risk, or are these things just disconnected? I appreciate this is about as wonky as I could have taken this topic, so I apologize in advance. Zack, to you.
Well, what is it? Well, I mean, what's your pick? Is it make or break? Is this model going to live 6 months from now? What's your gut say, Adam? Make or break?
I have no idea.
Well,
I didn't
what the
really.
hell? The next 6 months are going to make or break it. Come on,
I'm with Will.
Take a
I
stand.
blindly follow Will.
Fill all these charts.
Okay.
Naomi, what do you think? Make or break? Make
I
or
mean,
break
I'll
for this model?
just mention it's an interesting way of phrasing it, because saying is Bitcoin behaving as a money? And it really is largely are people perceiving Bitcoin as behaving as a money? Because it's all about people's expectations and where they're putting their investments, and that's what's going to determine whether or not this is a store of value. So rather than phrasing it as an active thing, like Bitcoin is behaving like this, it's this passive thing, and it's determined by people's perception of it, which is it's very interesting because there's a lot of game theory in there. Other people thinking that Bitcoin is going to be the store of value, so it may not even be largely based on people's own convictions. It can be just what they think other people are going to be doing and making bets according to that. So it's just a very interesting phenomenon. We haven't really seen anything like this because it really is such a grassroots money evolving from the ground up phenomenon. There is no government fiat. There is no government say, we demand that you consider this to have value. It's just the market, evolving and saying, well, we've kind of figured that it does, and we've decided that it does, and value subjective. So super interesting to see it play out, and I have no idea where it's going.
So just to wrap up on that.
Take.
Yeah. So I mean, like, if you so Naomi, to your point, if you draw back kind of the lens of history, right, and you look at like where did gold and silver standards emerge from, right? What you find, and I've been reading lots of Rothbard lately, so I apologize again in advance for the economic take on this. What you find is that these standards actually tend to be like emerging, right? They tend to be things that come up organically because they just happen to be the best way to do money that we've really found to do. Now, that's not the way that things work today. Today, when we're talking about monetary policy, we're talking about monetary policy that is set by a central committee or by a group of countries or something like that, and doesn't have that kind of bubbling up characteristic about it. But that's enough about economics for today. Let's go to our next story.
That's right. So we're still going to be talking about a chart that's going up and to the right. Of course, anything to do with Justin Sun does that. So the supply of USDC on the Tron blockchain has surpassed $100 million only 2 days after listing on that blockchain. So taking a step back, USDC is a stable coin, operates typically in the Ethereum blockchain. And according to a nice Zack Seward scoop from, I think, 2 weeks ago, they're now moving to 10 different blockchains, Tron being one of them, apparently. So what does this mean? Like typically you see Tether is kind of like the dominant stable coin on a lot of these networks, and these are privately issued stable coins. So there's a dollar somewhere in some private bank account that's typically monitored or maybe not monitored by a government entity. And then they issue an asset on chain that tracks a dollar. People use them a lot of times just for trading back and forth on exchanges or moving money across borders. Here, they're using Tron just because it's cheap. Typically, that's the only answer. Tron has a lot less security than other blockchains, but it's very, very cheap, and it's becoming kind of a go-to for a lot of these stablecoin networks. Zach, I'm going to toss down to you. Did you see this happening in like 2 days at $100 million? That's probably up there for like stablecoin records in terms of issuance. If you keep track of that at home,
I was looking at some of the blockchain explorer data, and it's like really interesting to see like the top holders. It looks like Poloniex is like the third largest holder of this with like 10.4 million in USDC on Tron. So I think it's like exchanges sort of like swapping some assets to a different chain, as you mentioned, to reduce fees associated with their underlying networks. So it's really interesting. I mean, I think I learned this the other day, but yeah, Tron is the biggest network for Tether. Like there's more tethers on Tron than there are on Ethereum, which I thought was quite interesting. So the fact that USDC is also getting on Tron could be quite interesting in terms of Tron, in terms of USDC's growth relative to Tether's growth in the market. By far, USDT Tether is the big gun, and then USDC has been gaining ground in recent months, but Tether is still the big dog. So the fact that Tether works so capably on Tron is potentially interesting if others start fleeing Tron, and if others start fleeing USDT, and you see USDC as a better bet. But yeah, I don't know. It was interesting to look at some of the data associated with the blockchain on this one, and there's always good nuggets in there. So that was cool to see. Jen, what were you going to say?
Well, I'm still wrapping my head around the story, but I do have a question for Will. What does this mean for Ethereum and its future?
Looks like Ethereum has failed. No, so there's a few different threads you can pull on here. The first is like there's different stable coins, and they're all competing against each other. So we talk CBDCs, private stable coins, algo stable coins. In the private stablecoin land, which is like the most dominant form right now, basically have USDC, which is like Coinbase and Circle's coin, versus Tether, which is Bitfinex's coin. So that's interesting. In terms of like USDC or stable coins on top of Tron or Ethereum, traders just kind of go where things are cheap. Right now, prices on Ethereum, they're still expensive. Even like they were much more expensive earlier in the spring, but it's still expensive compared to what you would pay on Tron. So traders just go to where it's cheap. you get less network security overall. So if there's someone really tried to attack the Tron blockchain and get some assets off of it, it's more likely to happen than it would on Ethereum. But overall, I just think it shows a demand for cheap transactions across borders. I don't think it really says anything about Ethereum versus Tron at this point, besides Tron's a little bit cheaper. Adam, your take?
Yeah, so I want to draw back the lens a little bit again here and talk about what the point of these private stablecoins are from a business standpoint. From a business standpoint, whether you're talking about Tether, you're talking about USDC, effectively what you're talking about are companies that take one of your dollars and then give you a token that represents a claim on a dollar that you will never claim. So once the dollars have gone into these various systems, effectively the company that administers the stablecoin just sits on them and then earns interest on those reserves, which are quite meaningful. Now, at the beginning, when we set up this story, we talked about it as if there were dollars sitting in a bank account. And for a long time, that was the story, but that's not actually the story. We recently learned that Tether first and then USDC later actually have diversified their reserves into a variety of types of debt, which they then earn interest on. So I would take this from the other side. I don't think there's demand driving this at all. I think there's supply driving this, where effectively you have these different companies just trying to grab as much market share as possible. And to the extent that they can make Tether look like they're incompetent, or they can make themselves look like they're just better than Tether, is to the extent that they can accomplish that, because they're effectively identical as far as vehicles are concerned. So it's really just a question of who's making more money. Is it Bitfinex on the one side with Tether, or is it Coinbase and Circle on the other side with USDC? Somebody's making money, and that's what these stablecoins really are about.
It's true. And we always know Justin Sun is probably making a little cash here as well, which is just nice to think about. Jen, we got some NFT stuff up, right?
Yeah, speaking of a little cash, NFT sales hit $2.47 billion in the first half of 2021. That's according to a report by DApp Radar. So this showed a dramatic increase in NFT sales since January. As we all know, we talk about NFTs all the time. So I wanted to look at a few graphs here. These graphs were published in Reuters. The first one looks at what NFTs are kind of dominating the market, and it's sports and collectibles. Here we go. Sports and collectibles. And the metaverse and gaming were the two, I guess, with the least sales, which was kind of surprising to me, but not surprising. And then the next graph shows that NBA Top Shot sales are way down in the last few months. So I wanted to throw this off to you, Zach. What do you make of this? I do want to clarify, though, the notes at the bottom of both graphs. So NBA Top Shot is on the Flow blockchain, and those stats we saw on the first graph are from Ethereum. So if anyone is thinking like sports and collectibles are way up, but NBA Top Shot is way down, the two graphs don't really go hand in hand. But Zach, what do you take from this?
What do I take from this? What goes up must come down. It's the rule of some physics and probably the rule of most crypto markets, right? This was when there was a ton of excitement in the market. You could buy a card and immediately flip it for like 2x what you paid for it or whatever. And people were having fun doing that. Yeah, I don't know. I mean, I think that looks like what hype things look like in a market, right? They go up and then everyone's like, okay, this is like, okay, I'm selling, or okay, this is the top, okay, I'm out. And then it goes down. And we're seeing that right now, I think, in the NFT market, especially, yeah, definitely in Top Shot. And I would probably venture across the board as well. So the question is whether or not it tracks to the Gartner hype cycle, where it's like, you know, you get the peak craziness and then you get a plateau of usefulness. Maybe these platforms can find that plateau of usefulness. Maybe not. Maybe there's farther to fall. But I don't know. I think it's just interesting to see these markets, how time and again, when there is that market froth, you know, significant drawdowns typically follow. So I think that's the interesting thing for me. Will, I think you had your hand up, or Adam, I forget who had it first, but you guys can duke it out.
Let's fight, Adam.
You want to, Will?
Let's fight. I'll go.
Okay.
I'll go really quick.
All right, go quick.
So interesting to look at that graph and see what their values were in October, November, December, and then boom, popped, obviously, with the NFT bubble. But those values are still pretty high, like 62 million in volume, I'm assuming that is. And then, you know, skirt off a little off the top of that and you get some nice profit there. Going back to their raise, I mean, Zach can talk about this maybe after Adam. Like, they raised money at the peak of this, like in March, I think, and their valuation went to $7.5 billion, which is nuts. So I'd like to see a new valuation number come out of this, maybe in the next few weeks or months, just kind of as their volumes continue to decline, if that's what ends up happening, because that valuation was probably a little bit high in the mix of things. But I don't think by any means does that graph show that things are done right now. I just think like volumes are half of what they were, but they're still probably like 20x what they were in October.
Yeah, so we're very much thinking on the same lines here, Will. You know, when you look at that chart, it is rather striking to see that although we are down from the peak, it's much more than 20x. You know, we were talking about sales figures at the end of last year, you know, towards, you know, like $1 million, like $800,000, something like that. And now we're talking about numbers being down at $50 million. Now, to your point about the valuation that Dapper raised at, again, you got to keep in mind that the way that these cycles work is through a series of beaconing events, as I like to call them. And what a beaconing event is when something happens that it grabs a ton of attention from outside of the space and it sucks it in, which then brings in a ton of new money, a ton of interest, and catalyzes stuff that wasn't going to happen without that. Now, that raise that Dapper did at that valuation, they already did that raise. They don't need to put out a new valuation. And in fact, they're not going to put out a new valuation because there's no advantage to them to do so. But during that time, they managed to accumulate some $300 million, I believe, in new investment into the company at that raise, which is on the one hand, an incredible accomplishment on the part of their team. And on the other hand, an incredible war chest by which to now amplify this success that they have with this project. We talk about NBA Top Shot a lot, and we talk about NFTs a lot, but NBA Top Shot is the story of the year so far. It might not be towards the end of the year, but it is so far just by nature of how much it exploded this new category of collectible tokens into the mainstream. And I think it's going to continue to be a leader in that by nature of this raise and by nature of the resources that they now have to continue to deploy.
Zach, just before we wrap, I want to add one thing in. So while NBA Top Shot was down, the report said that NFT sales were slightly up in Q2 versus Q1. So we are still seeing sales rise a little bit. So it'll be interesting to see where it goes for the rest of the year. But I'll kick it off to you, Zach, to wrap us up.
Yeah, for sure. Yeah, let's wrap it up. That was a good little factoid. I'm up for that one. We'll close it there. Thank you so much. It's the hash. We're back this week. I feel a little out of sorts, you know, after the long weekend. Like we're not in the flow.
Everyone's just well rested, or really not well rested.
Just chill.
We're just chilling. We're just so mellow right now. We'll do it again tomorrow, and we'll try to up the energy. But it'll be good times. This is the hash. I'm Zack Seward. We have Naomi Brockwell. We have Will Foxley, Jen Sanasie. Adam B. Levine is with us this week. It's going to be a fun one. Tune in to All About Bitcoin today at 3 p.m. Eastern on CoinDesk TV. And then tomorrow at noon Eastern, it's us again, and we'll do it all over. It'll be fun. We'll talk to you then, and stick with us on CoinDesk throughout the remainder of the day. Have a good one. See ya.
Bye.